Good evening, viewers, and welcome to a brand new show, the Mortgage Busters Show. My name's Greg, and sitting next to me is my co-host, Adrian.
G'day.
Welcome.
Thank you. Thank you.
Adrian's got a wealth of knowledge and experience in finance and the real estate industry, and he'll be co-hosting the show with myself. We're going to bring you the experts that are going to show you how to pay down your mortgage really fast. Not only to pay down your mortgage, but to take care of all your finances and also help you build some equity, some wealth, so you can enjoy life all about you, and just, enjoy the fruits of your labour and, get rid of the ties of debt. Adrian.
Yes, let's go down the journey to get rid of the mortgage together. Step by step, we're going to have retirement experts on the show, we're going to have financial experts on the show, we're going to have real estate experts on the show, all about getting rid of your mortgage. A little bit about myself. I've probably seen, goodness me, 500, 600, 700 clients in my life, maybe more.
I'd say you'd be heading into the thousands.
More, I don't want to exaggerate.
And what do they all say? What do they all want?
Well, they're all really worried. Firstly, nobody really goes out to look for the mortgage. Nobody analyses it. Nobody looks into it. They just forget it. They just set and forget it.
Out of sight?
They're just scared.
Out of mind.
Correct.
Out of sight, out of mind.
They're just scared. So we've known each other for a while. We've seen this how many times?
Oh, many times.
Many times. And a lot of people, they just don't do anything. They don't do anything for their retirement solutions. They don't do anything in reference to their own mortgages. They don't do anything to get a better deal from the bank. They just don't do anything. They just leave it.
It's amazing what you can get when you ask for it. And
yes,
what Adrian has said does have a lot of merit. We have seen a lot of people in the course of our work. And most of these people, their biggest concern when it comes to finances is the mortgage. How do we get rid of the mortgage? How do we get it paid off so that we can get the title in our hands so that, when we get to retirement, at least we don't have a mortgage to worry about.
Well, have a retirement. Have actually something to live off at retirement.
Exactly.
Because that's the biggest problem, isn't it?
Is the pension big enough for you to look forward to?
I don't think there's going to be one.
I don't think so either.
Really? I mean, the way it's going, it's going to be very little.
That's right.
If there's anything there.
And we're not even sure that it's going to be there. In fact, I think they're talking about 2018, only a few years away from now, before they start phasing it out.
And people want to have $50,000 to $60,000 a year to live off. How are you going to do that? Unless you plan ahead.
All I can see is that there's going to be a lot of poverty in retirement unless you take control of your finances right now and make it happen. Do it now. Watch the show and make it happen. All right. Our first guest.
Yes, Steve.
Stephen Hudson.
Our
Steve
guru.
Hudson is our guru expert on finances. He's going to be our resident finance expert, finance guru. So welcome, Steve.
Yeah, thanks guys. Thanks for inviting us on the show. What you're doing here for Australians is fantastic.
Thank you.
Because
all
of us, when we meet up with Australians from time to time in their homes, they do struggle to be paying off their mortgage, and it's one of those things that really needs to be addressed. Well done, guys.
Thank you.
Thanks for coming.
Steve, what are the viewers watching right now, the show right now? What could they do tomorrow to help them start reducing their mortgage quickly? What are the steps that one could take to start doing that right now?
Well, we do preach three things that you can do straight away, but there's one thing on top of that you can do. Last night we were out at Mill Grove talking to a lovely couple, and a couple of days prior she'd actually picked up the phone and spoke to their bank and asked the question, is there a better loan and cheaper repayments, no fees, no nothing? And they said, yes, there is one.
Does someone answer?
But how did she get that idea to do that?
I don't know. It just maybe because we were going out there to talk to her about.
Because that's different.
Talk about mortgages and so forth. Maybe that prompted her to actually do something. But I was just proud that she'd actually picked up the phone and done that. So that's brilliant. But as I said before, there are three things that we do preach in the finance industry that you should be looking at for your mortgage to help you along the way. First is to have an offset account. I think it's important for every mortgage that's attached to your private place of residence that you have that attached. The other thing is instead of having monthly payments, make them either weekly or fortnightly. And the other third thing is if you do get lump sum, if Nana or Granddad leaves you some money, or you get a bonus from work or a tax return, put that into your mortgage. And a bit later we'll show you what that really means to a mortgage.
So just recapping those three things. The first one being making extra payments.
Yep.
The offset account.
Offset account.
And
Fortnightly or
payments.
weekly payments.
Well, which is better, weekly or fortnightly?
Most people, well, weekly is the obvious one. Most people go for fortnightly, and typically most people set up their payments to their pay cycles. So if you're paid weekly, they will pay their mortgage weekly. Even if it's a monthly payment, they will pay weekly because that's how they control their money. If you're paid fortnightly, which quite a few industries do, again, people will pay fortnightly. But there is a trick to it, which there's no smoke and mirrors. It is purely the way that you are making more payments over a period of 12 months. So you actually make more payments, and therefore that reduces your mortgage. And that compounds over a period of 30 years for the life of your loan. So.
Okay, all right. Well, we're due for our first break.
Yes.
So we'll go to a break. When we come back, could we go over those three separate ways of paying down a mortgage more quickly, so that the viewers, if they wish to, they could go out tomorrow and start employing these methods?
Absolutely. Yeah, absolutely. That would be great to go through that. We can use the whiteboard, put
whiteboard,
up some numbers,
fantastic.
and yeah.
Okay, we'll go from there. All right, thanks for watching the show. We'll be back after the break with the Mortgage Busters Show. Welcome back. You're watching the Mortgage Busters Show. Steve.
Greg.
So, the three things that viewers could go out tomorrow and start paying their loan down a lot more quickly. Number one is the offset account.
Correct.
Number two is weekly, fortnightly payments.
Yes.
And number three is a one-off lump sum payment.
Yeah, absolutely. They're the three critical things that everybody should be considering to do with their mortgages.
Fantastic.
Why don't we just have a look at the whiteboard and let's see how an offset account works, because
It's all yours.
yeah. Let's use a nominal amount for a loan amount. But if someone's got $100,000 mortgage, K stands for thousands, typically you would have what we call an offset account over here, attached to the loan. And any money that you've got in that account, let's use, say, a number of $10,000 is sitting in that account, it would offset your mortgage. And the way that happens is that your interest is calculated daily. So from a bank's perspective, if you've got 100K in there, or a lender's perspective, you've got 100K in there, they're charging interest on that. With the offset account, sorry, yeah.
Yeah, are all loans, is the interest calculated daily on all loans?
Majority of the loans, and I would say pretty close, 99.99% of mortgages are calculated daily.
Okay.
There's always going to be one out there, Greg, that's not. So you just got to put a disclaimer in there.
Yep.
So the way this operates, because it's calculated daily, because you've got $10,000 sitting against 100, you've got 90K there now that the interest rates are actually being charged at. So you're actually saving interest on $10,000 worth on your mortgage. You're still making the same amount of payments. So that money that was going to pay the interest is now going off to pay off that $100,000 directly, not towards interest payments.
So off the principal.
Off the principal.
Which is what you want to be doing.
Absolutely, that's what you need to do.
Yeah.
So during the month, you may find that you've got down to, say, 5K into the account. So now we've got 95K in the account being charged the interest.
Better than 100K.
Absolutely. Again, you're still saving money. The offset account is where a lot of people make the mistake. They don't put lump sums in here. What should be happening is that you're using all income that's coming in, be it Mr.'s wages, Mrs. wages, and if there's any other people that's involved, you've got any lump sum payments from the ATO, or you've got A and B coming in, anything, any money coming in should go in there, and then you pay anything, electricity bills, your mortgage gets paid out of here. But that money, while it's sitting in your account, instead of saving interest, not earning interest, it's saving interest. And it's very, 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 very tax effective in that way.
So it saves more interest
Yeah.
than it would earn interest.
Yes, so
Right.
let's put the 10K over here, and you earn interest in an account. You're earning money, and let's say you earn $1,000, you'll pay tax on that.
Correct.
Where this is and that's a fact. This is offsetting, so you're saving money. It's tax effective, and not only that, it's helping you pay off your mortgage hell of a lot quicker.
Much quicker.
Much quicker. Much quicker.
This is very powerful.
Oh, it's
very
powerful stuff.
Steve.
And you'll find a lot of people are not using this. In some cases, some people have got it set up and they don't know if they've got it set up.
Or they don't know how to use it.
And they don't know how to use it. So the first thing is to check your mortgage. That's the number one thing, is to see if you've got an offset account already attached. And if it is attached, then you start using it in this particular manner.
Steve, what about the credit card scenario, the 45-day, 55-day interest free?
Yeah. People who've got good discipline use that Adrian, and it's a very good mechanism to accelerate again, because with the free period that you can have on credit cards, and you can use any credit card that you like. You don't have to use it as the same lender. You can use it from somebody else. If that credit card suits your situation, you use, say, a 50-odd day free credit period. You use that to spend, buy all your goods on, your groceries, petrol, and so forth. And at the end of the month, you've got your $10,000 there. Your credit card comes in. The bill, say $2,000. Well, then you pay it out of here. You've paid no interest, but you've had the full benefit of the money that's sitting in the offset account,
30 days,
working against your mortgage.
Plus, you get rewards.
Well, yeah, you do. Yeah.
Every 10 years you get a fry pan or something.
That's it.
A trip to Noosa, I hear, coming,
Toaster.
Steve, one more question I've got
Yes,
for
sir.
this, and that is, what's the difference between an offset account and a redraw account?
Good question. Redraw, a lot of mortgages will have what they call redraw. So on that basis, you can take the money back out if you're ahead of making advance payments. But with redraw against the loan account, often there is a minimum amount that you have to take out. So with some lenders, it may be $1,000 or $2,000. So then you have to take that lump out. Where this, you can take out $1 if you want. Okay.
Right. And usually there's a fee that goes with it too.
Well, not on the offset account, but on this one.
On the redraw, yeah.
On a redraw,
On the redraw.
there could be a $5 fee or $10 fee. So if you've got to go and buy something and you take out $2,000, it means you've got to put it back in again. And if there's a fee attached to it, well, there's a cost that you don't really need to have when you've got an offset account.
This is, if the viewers are not doing this, they should be looking at it.
Number one thing is to check to see if you have an offset account to your loan, and if not, then start looking at products from lenders that do have that facility. Number one.
Okay, fair enough. Then that just one more little question.
Yep.
That offset account, does it operate like a normal account, like a everyday account? You can have a checkbook, you can have this, you can have that.
You set up your checkbooks separately, but yes, they can operate as a typical savings account that we would have traditionally been introduced to from our school accounts. It's the same as that, but now they've got the offset accounts which are attached to the mortgage, which gets you these benefits.
Right. Excellent.
Yeah.
Very good, Steve. All right. Well, I think we've still got the fortnightly and weekly payments to go.
Yes.
And the one-off lump sum payments.
Yes.
Before we get stuck into those, we need to go to a break.
That's
so
right.
viewers, we'll just take a short break and we'll be back after these messages with the Mortgage Busters show. Welcome back. You're with the Mortgage Busters show. Steve,
Greg.
this offset account, I love it. Very, very powerful.
Very powerful, Greg.
Do most are people aware of this? Do they employ it? Is it?
There is some people who are very disciplined and employ this principle. You'll find that people think they've got it set up and they don't know, and that's a concern, because if they don't know, then they're not using it. And the principles of paying money into it, they're probably not doing either. And some couples, we've found that they're actually accelerating their payments on their electricity account, which is a great discipline, but that money should be actually still sitting in their offset account, working against their loan.
It's opportunity cost.
Oh, absolutely, mate. Absolutely, Greg.
Okay, so that's the first and foremost thing they could do to start paying their mortgage down quickly. Number 2 is fortnightly or weekly payments.
Yep.
All right, let's have a look at that.
Okay. Let's just hope this board flips nicely. Yes, it does.
Wow, magic.
Nothing written on the other side, which is even a bonus. So when it comes to fortnightly or weekly payments, let's say someone is paying $1,000 per month payment. So that multiplied by 12 months is $12,000, correct?
Correct.
Okay, stands for 1,000. So typically what would happen in fortnightly payments, you would divide the 1,000 by 2, which is now $500 per fortnight. Okay, whoops. Per fortnight, there's 26 fortnights or payments that are made. So when you start doing the maths on that, it's actually 13,000. So they've paid an extra $1,000. So there's no smokes and mirrors. It's just purely someone is paying extra money into their mortgage account.
It is
by
because
doing.
you think that by making fortnightly payments, it's half of a month. So you double the amount of payments, which is, you'd think it's 24.
That's right.
But it's really 26.
Yeah.
I don't even know if I made sense then,
Yeah.
but you know what I mean?
You're quite right. We've got 1,000 payments by 12 equals 12K over a period of per annum. You break that down to $500 per fortnight. There's 26 fortnights in a year.
26, yes.
So therefore you're making 26 times 500. And if you do the maths on that, it is 13K. You are paying $1,000 more. A couple of other things that go hand in hand with that, Adrian, is that when you make the $500 payment fortnightly, you have actually paid $500 before someone who would have paid monthly the $1,000. So going back to the offset account principle of having that sitting in the offset account, you are actually paying off more principal in that way. So interest, which is calculated daily, is now not being charged on that $500 compared to someone who is actually paying $1,000. And that's powerful as well.
Big.
Yeah,
Very
I get
big.
that.
So that's, and using the credit card, Adrian, if you've got the discipline, that's another thing that you can use to utilise that. Weekly is similar to this, but it just means, as I said before, you're paying the $500 before a person would be paying the $1,000 at the end of the month. Weekly means you're paying the $250 before the person pays the $500. So, and typically most of these payment schemes are set up to how a person is being paid. So if you're on monthly, all your bills will come in monthly, so you pay monthly.
Right.
If you pay fortnightly, if the money's sitting in the offset account, works the same thing. The magic is this part here. Okay.
Wonderful. That makes as much sense as the offset account.
Absolutely.
Really good, Steve. Okay, last one.
Last one.
Lump sum payments.
Let's just make a bit of room here. Lump sum payment. The interesting part about lump sum payments is we take an example of $1,000 and we use 5% as the interest rate over 30 years. You're actually paying interest around about $933 over the life. So if you make a lump payment, be it a tax rebate or a gift or however the money comes through, you have a Tats Lotto win, you put it into your mortgage account, you're actually saving yourself the $1,000 payment. So you paid down the principal, and again, the payment that you would be paying on that is paying down the principal again. But you're also saving $933 over the life of the period of the loan. So you can imagine as interest rates go up, this number's going to go up.
Of course.
And the earlier you make that into the life of the loan, the greater financial benefit that you're going to get in paying off the loan a lot earlier.
So it'll always be a benefit, whether it's $100 or $1,000 or whatever.
Absolutely. Coming back to the offset account where you've got $10 sitting there, it is working against the actual principal of your mortgage, and you're not paying interest on that.
Right.
And that's how lenders make their money, and we know how much money they make. So from that perspective, it's a good thing. It's a good discipline to have.
Thanks heaps, Steve. Thanks for bringing those 3 strategies to our attention. Viewers, do yourself a favour, check out your home loan and see if you can have an offset account applied to it, or you know what it takes to make a lump sum payment, or whether you're paying monthly and you want to go down to fortnightly or weekly payments. All you got to do is ask your bank, or check out our website, which is
www.tmbshow.com.au.
tmbshow.com.au. On there we'll have Steve's contact, and we'll have all our contacts that we bring on our show. We'll have them available there for you to make contact with. Steve, we'll be seeing you from week to week. Thanks, Steve.
No, Greg, you're more than welcome. Adrian, thank you for inviting me along.
Welcome.
It's a show, again, congratulations. It's a show that Australians need to educate them about finance and how to really bust their mortgage down. And look, invite your listeners and your viewers to actually put some questions forward. Go to the website, put some questions forward, and we'll try to answer them next show.
So again, check out our website. And on behalf of Adrian, Steve and myself, we'll see you next week.
Have a good night.